DeepSeek AI derails risk assets as tech stocks get trashed. And crypto vols pop once again as BTC gives up the 100K level. All this and more in this week's Crypto Options Unplugged. Welcome back to Crypto Options Unplugged, everyone. I'm Imran Larker from Options Insight. I've got my man Dave in studio from FRNT. And today's special guest is Alex Ryvkin, CEO and founder of Rho Labs. How you doing, man?
I'm good, man. Thanks for having me.
Yeah, good to have you on, Alex.
Good to have you. Good to have you. So, tell us, what is going on? Actually, before we get into what you do at Rho Labs, why don't you tell us a little bit about your background in whether it's in trading, sales, whatever you've been doing back in the day?
I'm one of the recovering TradFi folks, like a lot of us here in crypto, on the DeFi side of things especially. So
this is like your therapy here, so
pretty much. I got the couch and everything. So I started in equity sales trading back in the day, emerging markets mostly. Worked in a bunch of places, London, Dubai. The last thing I did in TradFi, I was on the derivative structuring side, basically creating very custom products for kind of all walks of life, for private bankers, corporate treasuries, whatever, all kinds of asset classes, a lot of different problems we were trying to solve. And then I kind of decided to leave the dark side and moved back to London and launched my first startup, which, as it customary happens, didn't take off as much as I hoped it would. And before I launched Rho Labs, the last thing I did before I was running product and technology for Copper, which is one of the, I'm sure you guys know, but one of the kind of preeminent infrastructure firms in crypto for institutional investors. So we did custody, prime, a bit of everything. And at the end of 2022, actually 1 week before FTX, we registered Rho.
Oh, nice. Great timing.
Yeah, timing has never been my greatest suit. Like not in this case. Yeah, it was a difficult market.
What was going through your mind when you launched that business?
Man,
just as FTX is blowing up.
I didn't care much because I felt that there was a bit of a lag to this thing. So starting a business, and by the time anything market related really matters, of course, like raising money in 2023 was a pain in the ass. But
that's the biggest hurdle, isn't it? If you do need to raise capital, it's not as easy when that sort of stuff's happening market wide.
I mean, it's all relative, right? So we still managed, and we were probably at the middle of 23. We were probably one of 3 new DeFi projects that managed to raise money. And we were very lucky having like proper TradFi fintech investors as well leading the round when very few were prepared to touch crypto. But it wasn't easy. But in the end, if you kind of zoom out on the chart a little bit, if I compare my experience raising money today with like experience and network we had and what we were trying to do compared to my first startups back in like 6 years ago, it's a completely different environment now anyways. So.
So tell us then, what do you do at Rho Labs? What's Rho Labs do?
So we are trying to build pretty much the first out there, to the best of our knowledge, rates exchange.
Rates exchange. Crypto rates specifically.
So we can do anything, but we want to do it on the blockchain and with crypto native rates. So technically the framework that we built, we can do anything that looks like a rate. We can do TradFi rates, we can do SOFR tomorrow if you want to. We just don't really think there is a lot of demand for that right now. And where we actually see people being really interested, and then that is something which is emerging, which is quite exciting for us, is that actually if you look like 5 years back, there were no really prominent, meaningful rates in crypto, right? Before sort of DeFi Summer 2020, there was some lending, but it wasn't massive. Perps were there, but probably not that big. Staking was there, but Ethereum was still proof of work. And like all these things existed, but it was probably not worth being an asset class. And nowadays it's quite a bit different. And that's what we're trying to focus our attention on. So we started from funding rates, so perpetual future funding rates on major exchanges, which we feel is kind of the most important family of rates in crypto. And we ended up launching the product about 7-8 months ago, and it's been going quite well for us.
Nice. You've had a look at that platform, right? I haven't been on it yet.
I mean, Alex and I have sort of spoken around it before. So yeah, I mean, for me, I think what's really interesting about what Rho Labs is doing is I obviously was at Lehman's in 2008, and so much of that was obviously the blow up of, well, lots of things blowing up, but the interest rate derivative market blowing up. And so much of it as well was around like the collateral. No one knew who owned what. There was leverage like everywhere. And you know, one of the first things for me that stood out about crypto and certainly blockchain was the idea that if all of that stuff had been on the blockchain, we might have avoided a chunk of what went on, because no one knew who owned what. Then all of a sudden, no one was going to sort of pay anyone back because they didn't know where money was coming in from. And we had this massive credit crunch, and everything sort of froze. So when Alex and I first sort of spoke about what they're doing at Rho Labs, it kind of just went, yeah, like we should have an interest rate derivatives market on chain. Of course we should. Like, of course that's the next evolution, or one of the sort of parts of the evolution of this whole sort of business. And it's interesting now. Obviously, you've got you know, like Larry Fink and that, and talking about, you know, bringing everything on chain, tokenizing everything. And so, I mean, I can only see the interest rate derivatives and just interest rates on chain being just huge. So,
and the type of users, right? So, like, who would typically be the user who would want to trade a derivative on perpetual funding rates, for example?
So the way we define it is kind of very broadly, right? And that's the baseline. Then there are like groups of users within that. Anybody who ever traded a perp is a potential user, and not just because they're trading perps, right? But because perps are the vast majority of derivatives volumes in crypto, and anybody who has traded a perp basically did that jump from just spot trading, I just want to buy and hold Bitcoin or like anything like that, right? Or ape into some kind of a meme coin and actually taking trading more or less seriously. So whether that is an individual investor who is sophisticated enough to trade a perp, so there is no reason to me why they shouldn't be sophisticated enough to trade what we're offering. And it might sound complex when you describe it as like derivative, or the funding rate on a derivative, that type of thing. But really the way we're trying to build it, and if you look at our product, right, just basically if you look at our product, if you've ever seen at perps DEX or like a perps exchange more broadly, you would know exactly what's going on. Just whether you want to be long this thing or short this thing, and like basically the way it works, maybe the P&L calculations are slightly different, but you will know exactly what to do.
How volatile are the perp rates these days?
Oh man, that's the biggest, that's the fun bit, right? Because when people think about rates in TradFi, they immediately think hedging, right? Because that's sort of aside, unless you're a hedge fund. If you ever traded an interest rate derivative, you're probably like a corporate or like, I don't know, a pension fund trying to hedge like 20-year risk. And people immediately start asking, that's our experience at the end of 22. You go like, we're going to be doing rates in crypto. They're like, yeah, but who cares about 20 years rates in crypto? But the reason why it works that way, we think, what you're trading in TradFi is super important, but it's a treasury rate, which has some volatility around about every decade. And then the rest of the time it kind of lies flat, right? So but if it does move, it changes everything, like we've seen recently. Here is different. So this stuff is super volatile, and people who care about it are, in terms of their thinking and their investment horizons and genuinely the way they think about the markets, are way more short term. So if you look at even Bitcoin funding rate on Binance, normally it sits at 1 BIP every 8 hours, 1 basis point every 8 hours, that longs pay to shorts, which is around about 10.95% annualized APR, right? I think 3 or 4 weeks ago, it spiked up to 76.
76 from
76.
From how much?
From 11, essentially.
Oh, from 11. Okay, right. That's the annualized rate went to 76.
Annualized rate.
Right.
And then 2 weeks later, it was negative. And I think a week ago, the lowest point I've seen is minus 19% for a very short period of time, but that happened.
Wow. Okay.
So that's suddenly from sort of the thing that you only care about if you have a very long-term investment horizon, and if you're like massive duration and stuff like that, suddenly you get to a fun and volatile and interesting thing to trade that behaves quite weirdly. But at the same time, if you're actually taking trading seriously, if you're like a basis trader, if you're like long position for a long period of time over a perp, you are not a big fan of your kind of hurdle rate going from 10% to 70% overnight, right? So suddenly everybody cares. And it is quite volatile. It is good fun.
And is it like, you know, people talk about funding rates as a really good barometer for like the amount of leverage in the system. Would you say that's accurate? Like, is does it give you a really clear indication when funding rates blow out really, really high at 70% that the market is just like limit long and levered up to the wazoo? Or is that not true?
I think it's decent, right? Because basically when that happens, like theoretically, the funding rate, the biggest kind of parameter determining the funding rate is the difference between the spot prices and the perp prices. Perp is a leverage product. By definition, you can trade spot on leverage, but it's typically more expensive and all. So the more sophisticated traders would probably loan with leverage through a perp. But it's kind of, it's short-term in nature, right? Because the way the different exchanges treat these rates is also quite different. So there is no straight line from, basically, point being, it's a decent indicator if the market is very bullish or very bearish. I do not think it's really the way as like a single parameter to determine the amount of leverage in the system, because there's way more happening in the background.
Too many moving parts,
exactly,
right?
Exactly.
Yeah, fair enough. All right.
Yeah, I was going to ask as well. So you're on your platform. You're able to trade perps and stuff from other exchanges feeding into that. What's the benefit and advantage of that versus like going direct to those exchanges? Why Rho Labs?
I think there are a couple of things, right? So first of all, for the time being, that's the only place where that's possible. So Binance doesn't offer Binance funding rates as some kind of a synthetic exposure.
Right. Okay. Yeah.
If they do, there is still an argument whether you prefer to do it on the same venue, or you prefer to have a specialized venue, or you prefer to do it in the other venue for like risk diversification reasons, like whatever it is, right? People are still kind of, I don't know if any of you have any feelings about that, but we constantly get asked, people who are basically trading on, say, Binance, right? Because of the clamp and because this is not like a very straightforward kind of market-driven mechanism that determines the rates, everybody kind of thinks that those rates might be manipulated in some way, somehow. Nobody can prove it. And actually, there is actually no liability on Binance not to, like, they have the formula, which we do not necessarily disclose fullest, and nobody knows. And I think another advantage is basically liquidity and ability. If you want to trade rates, and for example, with us, you can run very successful trades across multiple exchanges. So if you want across rates from multiple exchanges. So back in, I think, July, when we just launched the platform, we constantly publish like trading ideas and basically trying to show public the way to use these products, right? So we published an idea. We have like blog posts and videos about it, which basically talks to the spread between OKX and Binance perps on, I think, Ethereum at the time. And there is normally some kind of spread there. It's not always one-to-one, but we looked at the trends, and that spread basically got inversed by around about 5%. And by just making a bet from the single pot of collateral, cross-margined across those different venues on a single venue, we managed to show that you can make like 20% in a week, because we kind of called it right, and we did like before and after videos and all that.
So having all your margin on one exchange
exactly
would help a lot.
If you already have accounts on all the exchanges, right, and if you have the infrastructure set up, like many big traders in crypto, they trade on 30 venues and they got everything set up for that. If you specifically want to execute a rates trade, or for example, if you want a venue that you can use, if you're running some kind of funding arbitrage, maybe you're running like OKX versus Binance, or maybe you want to run OKX versus some kind of an index or a basket of those things. There are plenty of things you can do if you have a specialized venue for that.
Cool. I think we should probably talk a little bit about what's going on in the market, because it's been quite active, right, this week. I mean, we had a lot of news flow. Everyone was very hyped up for the Trump inauguration and the executive orders that would come. And it sounds like he's done quite a lot in terms of what he signed through in crypto. You want to talk a bit about that and what your thoughts are?
Yeah, I mean, I think like, we're very spoiled in crypto, right? Like we just want the pump the whole time, and we all love the pump. But look, I think he's delivering on the things that he said. I think there's
no strategic Bitcoin reserve yet, is there?
There's
and that's what we all wanted to hear.
That's what we all wanted to hear.
It's been a week, Donald.
But, yeah, but it was probably a little bit optimistic to think that
would happen straight away.
So, you know, they've set up a task force to look at that and evaluate that. I actually think it's like quite sensible. I mean, like, I don't think we should underestimate what a big deal this would be, right? Like probably the biggest economic development in the US, arguably since Nixon took them off the gold standard, right? So it's huge. So it's kind of quite sensible for Trump to say, right, we're going to evaluate and look at it. So, but everyone's disappointed. We wanted some kind of announcement that was more definitive around it. The other thing as well, talking about digital assets or crypto, not just Bitcoin. Again, like I'm like, look, if it's going to be a reserve asset, it should just be Bitcoin, right? But again, they're going to evaluate it. I wouldn't mind betting that their assessment is like, yeah, we're only going to have Bitcoin in this thing.
Yeah.
But so there's some disappointment around that, but obviously it's a huge sort of step towards it. The other thing as well, I just think people aren't thinking about the implications of is this repeal of the SARB 121, like massive, where that basically prevented banks custodying crypto and Bitcoin. Because it was treated as a liability on the balance sheet. It was really expensive. So really prohibitive for banks really to come into this space. The repeal of that is massive because now it means banks can viably start to be involved in the space and start to custody crypto and offer all the products and what have you around it. Already you've seen like Bank of America, Morgan Stanley, a few others come out and say, right, we're ready to go now. So I think that is like massive for this space in terms of, again, like accelerating that institutional adoption. I think there's a torrent of cash that's like just waiting to pour into this space.
They banned CBDCs as well. Right?
Yeah. So there's that side as well. So like I think he's just delivering on everything. But yeah, we kind of just wanted more and more. But I actually think like, and we've spoken about this, the institutions are having a much bigger impact on this space. And the way I kind of looked at everything was, okay, obviously. You have all like the short-term spec guys ramp things up. Well, I mean, this time last week we were hitting record highs at 109k and above, right? So everyone kind of front ran that. The announcements come out a little bit disappointing. You got all the short-term sort of chop, and then we settled around 105k, and I was thinking,
yeah, that's where we're at the weekend,
looking good. And then the institutions by nature are a lot more considered, right? They're not going to go like on the headlines, sort of come in and just lift every offer. Like they'll kind of think about it.
A slow drip in.
Yeah,
right?
But it'll be like it'll be this consistent like demand sort of coming in, and that's what I still think is happening, right?
And that's also what Sailor's been doing, right?
Yeah,
I think one of the reasons why we struggle to really go down with any velocity is because he's there on the bid, and like every week we hear he just bought another X amount of Bitcoin at 105k or whatever it is.
Yeah.
Without that consistent bid being there, we probably would see a bit more downside volatility, right?
Yeah, and that's a really good example because as well, he's not going to chase headlines and try and pick levels or like go and sort of chase the market. He's going to be a lot more methodical and mechanical about how he goes and buys it, and I think all the institutions coming in will do the same. So I think I guess the TLDR on this is like it was undoubtedly positive last week for crypto, despite some of the disappointment. And I felt we were set up actually this week like for a really decent move over the coming weeks, and then
the elephant in the room, is DeepSeek AI.
DeepSeek, yeah.
So this is the Chinese AI model that's come out.
Yeah.
Funnily enough, it wasn't just at the weekend that it came out.
No,
it's been around for a few weeks.
Yeah.
Right? People have known about it, but it's almost like it hasn't hit mainstream consciousness until this weekend, and then everyone's like, "Oh shit, what's this going to do to US tech valuations?" Right? And the likes of Nvidia are down 10% overnight. The market's just opened up, and the Nasdaq was limit down at one point this morning pre-market. So it's like risk assets are having a bit of a flush right now, right?
Yeah.
And crypto can't generally escape that, right?
I mean, I'm a little bit skeptical, like coming out of China, saying all of a sudden they don't need Nvidia's like GPUs and all this stuff, and they're they're producing this for like $6.
6 million apparently, which seems a bit far-fetched, but who knows?
So yeah, it looks sort of doubtful to me, but obviously there's a knee jerk with Nvidia, and then you kind of get why it's going to impact the sort of Mag 7 that are spending sort of billions on this stuff and had perhaps a moat around the AI story. But actually for broader tech, like if we can more cheaply sort of run this stuff, then actually, for innovation longer term, it's amazing, right? And then also I kind of argue that, Bitcoin or crypto is like the currency of AI. So for me, it's not negative for Bitcoin.
Explain that a little bit more. Like how's that work?
Well, I just think like the more we go into this AI driven world, Like the more it facilitates decentralization, because we've taken out the need for a middleman in all of this. So the more we move to a decentralized world run by AI effectively, then the currency for that, you don't want to start going through the banking system and fiat. So you're going to be running on crypto rails and blockchain rails. So but again, we spoke about this in past sort of volatility events, or what we'll call it a VAR shock in the system. The first thing that happens is everyone gross down risk, right? You just de-risk everything. Even the positions you like, you get told to, you gross down risk. So I think that's the knee jerk that we've seen in Bitcoin as well. You've had this VAR shock, and Nvidia obviously a massive proportion of the US stock markets and indices. So firstly, everyone has to gross down risk and then sort of take stock of the situation. And I think that's what's going on. Now, that process can run a little bit in terms of the grossing down of risk. So I think we could have a choppy sort of week ahead. But I don't see that as being, it's not a negative for Bitcoin at all. And in fact, I wonder if actually we see some rotation out of the Mag 7 like back into crypto. So yeah, I'm not worried about it outside of...
Well, the Mag, speaking of the Mag 7, they're all reporting over the next 2 weeks as well.
They're reporting, yeah.
So the question I would pose is, does this Chinese competition threat, let's call it, does this mean people look at the numbers out of Mag 7 and with a bit more scrutiny, right? And saying, okay, these guys, they don't have a monopoly on this stuff, right? And all that, so I feel that there's a risk there for tech earnings a little bit on the downside.
Yeah. So then I guess like the question is, can Bitcoin sort of diverge from tech stocks essentially? So that's and I think there's a potential that we do. Also conscious this week, right? We've got the Fed, which we're not expecting anything from. But I wonder now if they'll just cool the jets a little bit. Trump saying you need to get rates down. Stocks are down, so Trump's not going to be happy, right?
But so far, Powell's been pretty defiant in the face of whatever Trump says, right?
Yeah.
I don't think the market's quite desperate enough to for him to actually change his tack just yet.
No,
right?
And I don't take much for stocks, to be on the back foot before people are crying for emergency rate cuts. But I actually think the data's kind of softened a little bit as well. Obviously, we had some softer inflation data, but I don't think we'll get much new out of Powell. ECB are going to cut rates for the 5th time this week. They're talking up more aggressive rate cuts. I think it was the chair of the French central bank was sort of talking up at Davos about need for more aggressive rate cuts. So we're still very much in this global rate cutting cycle. We spoke about. I was looking to fade the sort of dollar and US yield move that we came into New Year with. Just felt that was too far stretched on Trump and tariffs and all this stuff. He's certainly had a more moderate tone, I'd say, particularly
not against Colombia.
Not against Colombia. And that shows the volatility of Trump. But I think he said last week that he'd rather not.
But
very softening of tone, and I think you're starting to see rates unwind on that. The other thing as well, I have. Alex, I bang the drum on this a lot, but I've got I guess a broad sort of macro view that we're in a disinflationary world, driven by debt, demographics, and technology. And
Disinflationary.
And I think the one big thing that we've probably learned over this today and this weekend is that AI is going to get cheaper and cheaper, and it's going to be very disinflationary for the economy. And I think you're starting to see US yields perhaps kind of gauge that. I know we've got some risk off, but I still think the US yields continue to correct lower. Dollar's coming lower with it. So that was a massive headwind, now becoming a big tailwind. So yeah, it's going to be a choppy week. I'm probably more cautious this week. I'd be looking at some of your hedges, and I'd like to get into that. But I'm still, nothing's really changed for me. I think we'll climb the wall of worry on this pretty quickly, and I still think we're going to see Bitcoin push to new record highs in this quarter. Yeah,
I think using the dip. I mean, we've had. Crypto's interesting. Like sometimes vol reacts to up moves, and then occasionally when you get like a down move that surprises the market, then vol reacts to a down move, right? This is one of those occasions, right, where we've seen spot down 5% and vol actually catching a bid. And we don't see that very often, right, in crypto land, right? Because generally the sharp moves happen to the upside. So when you get a dip, and a dip that brings higher vol with it, usually quite a nice way to buy that dip is via call ratio structures. So you could go, say, end of February, you could buy, in fact, I did some of these this morning, right? You could buy like the 105K calls and you sell 2 or 3 of the 120 or 122s or something like that, right? And you net don't spend a lot, right? And the distance between those strikes is like 15K plus, okay? So you've potentially got, between now and the end of February, you've got upside of potentially 15K. You spent like less than a K for it, basically, right?
That's a nice trade.
So they're quite nice trades because that vol catches a bit of a bid on the sell-off, basically. Yeah.
Joe, the other thing as well that I think is interesting, when we get in these choppy ranges, I say we're still very much in a bull trend, and then we've been in a choppy range around 100K, like above and below, and it's you tend to need a little flush out moment that marks the local low, and then we can establish ourselves for the next leg higher. And there's normally a trigger. There's normally always a trigger, and this feels like that perfect trigger for me. So, I mean, I'm surprised at how strong. We've come back pretty bid already. I still think we might have a little bit more pain because, again, I think we'll see maybe some like mechanical sort of de-risking. But yeah, I think this will probably mark the start of the next leg higher. It's just how much pain we're going to have to take over the next few days before that begins. But yeah, like so far so good, I guess, in terms of just how resilient things are. And again, I do think Bitcoin looks a different beast this cycle because it's not so driven by retail degens sort of getting levered up to the sort of wazoos.
They're more interested in meme coins.
Yeah, they're all chasing around the meme coins. But again, we've got this real demand dynamic, like from the micro strategies and from you're seeing still the inflows into the ETFs. And again, I still think there's a lot of sideline cash coming in that like Trump and the administration's kind of green lighting that money to flow in. So I still think you're going to have this sort of consistent sort of demand sort of flowing in, and therefore it probably like limits and reduces the volatility and the size of the pullbacks. Because today we could have woken up and been down at 90K and we're not.
Yeah, I mean, ETH had a go, right? ETH was down about 8%. I think it gapped down about 8%, but Bitcoin held up maybe 5-ish, 5-6, and has recovered a bit now since the US market's reopened. But we're monopolizing this discussion.
Yeah. I was going to say, what happened with rates? I'm not even seeing what rates have done.
Wait, before we get there, don't you think that reaction, like, okay, DeepSeek is pretty impressive, but how big is it of a news, really, right? Because a lot of people are skeptical.
Yeah.
It's not really verifiable or verified by anybody. Doesn't that just signal how that type of nervousness from the market that we've seen such a strong reaction? Doesn't it just mean we're a little bit overheated and overhyped?
Potentially, yeah.
And you're right. I think we probably need a proper trigger. This looks like, unless it turns out to be something that changes like definitely in some kind of a tectonic way the shape of future infrastructure for AI, which remains to be seen. And how long will you need to verify that, right? It's probably going to take another few months to people to like work through that. You probably need something a little bit more fundamental with a little bit more pain to rebase that sort of the next phase of growth, right? And to your point on the Bitcoin cycle, also interesting. I was talking to somebody a couple of days ago. Normally, the way these cycles develop that we've seen over the past couple, like 2-3 cycles, you start with Bitcoin, then Ethereum follows, and then everything else follows. Doesn't it look to you guys that this might actually be a cycle of a slightly different shape? So we see some movement in altcoins, but it's like, week up, week down, that type of thing. Nothing happens in Ethereum, sadly. It kind of shapes up to look like maybe this cycle could potentially be just a Bitcoin cycle.
Yeah.
I don't necessarily disagree with that. I mean, yeah, we've been waiting for Ethereum to come alive, and it just refuses to.
To have to do something,
right?
Yeah.
I mean, or is it a case of Solana's had a pretty decent run though, right? So like some of the alts are doing okay, like Sui, Solana, things like that.
I mean, we had Raoul Powell on here before Christmas. Oh, nice. Was it back in November maybe? And we're talking about that, and that's
August.
Was it that long ago?
Yeah.
Oh my God.
It was.
Raoul was pretty big on Solana back in the day, I think.
Yeah, and then he's obviously been on Sui, so we've that's had a good move. So there have been some projects that have done well, but yeah, I take your point.
It's almost like there is an attention economy, and it leaves like separately from the actually fundamentally something going on the supply demand side, right?
Yeah, and there's a discussion on this podcast the other week about just that you had when got mind blank who we had on Greg Magadini, saying about like the different inflationary dynamics for ETH and how that's changed. It was kind of being deflationary, and now because everything's going via the layer twos, it's not. So there are things very specific, I think, for ETH going on.
I think ETH's just a vol sell, to be honest. That's what I've been playing ETH. Like going into the inauguration, the vol was up in the 90s, right? And it was really not clear to me that ETH was going to have that big a move on the inauguration. So I think whenever you see these spikes in ETH vol, I think fading them has been quite a successful strategy.
I do think as well, and someone told me to stop being boring talking about rates. But
Thanks for that. Keeping people engaged in rates discussions for a prolonged period of time.
Everyone wants to talk about meme coins, stuff like that. I'm like, well, ETH might do all right when rates come lower, but I still think that's like a valid thing in that, like I think ETH got killed again because like we had this start of the year move in rates and everywhere went higher. But I think again rates come lower as I'm expecting them to, and then all of a sudden DeFi yields and everything look a lot more attractive, and DeFi picks up, and ETH will still dominate that. So I still think there's a chance, but
I'm not holding my breath. I'm not holding my breath.
There are like two opposing forces, right? It's like one of my contacts in the industry was saying like basically if crypto is a religion, then Bitcoin is going to win. And if crypto is a business, then Ethereum is going to win. Right. And for now,
it's a religion.
It looks like it's absolutely clearly a religion, right?
Yeah.
And that thesis that Greg mentioned, right, on kind of stopped being deflationary assets in the way we understand it. When we were talking about the main driving force between the Bitcoin price is the limited supply, right? Still probably for everybody. And everybody was talking about questioning it by trying to saying, what if somebody starts another Bitcoin on the side? That didn't quite play out in Bitcoin. People tried. None of them became another Bitcoin. It might have been playing out in Ethereum, right? That same thesis.
Yeah, exactly. It may be that the alternatives to Ethereum really can compete, steal that market share, basically, right? But the digital gold asset is established, basically.
Yeah, and like when you think about what's been key about this cycle, it is the institutional adoption, obviously ETFs and whatnot, and now even like with, I was gonna say this, I guess he's kind of killed the idea of it just being a Bitcoin reserve for now. But you know, so much of the story is focused around Bitcoin. I think in past cycles we were all getting excited about all the alts and what these different ones might do. So it's been.
I mean, and things may change with the new regulations that they're passing, right? It might, if they really do want economic growth out of crypto, right? The reason why they want to make the US the AI and crypto capital of the world is because they think that's going to help create more growth, basically, right?
Yeah.
You're really only going to do that if the other part of the crypto space, not just Bitcoin, you know, starts to do better, right?
Yeah.
You know, and you have all these crypto businesses that are coming in, that are flooding into the US, right?
Do you guys think, and that's like a little segue to bring it a little bit closer to rate, sorry. What do you guys think is the impact of potential introduction of Ethereum staking into Ethereum ETFs and similar? Do you think that's going to change anything? Right now, regulatory kind of barriers of including anything staking, they treat it as a collective investment scheme, and it's really difficult, right? And it basically requires very different types of licenses and everything. So what if that goes away and they treat staking as we treat staking? Yeah,
I mean, look, clearly it's a good, if you're going to buy the ETF and you get more yield out of it, great, you're going to be happy about that. But you're not buying the ETH ETF for 5% a year or whatever the yield is.
No,
you're buying it for the like 50 to 100% appreciation that it might get. Do you know what I mean? So at the margin, I don't know. You correct me if you think I'm wrong on this, but at the margin, I'm not sure the staking yield is the game changer. Right?
No, I agree with that, and also the other big point about the ETFs was that it was a way and is a way for people to access crypto that couldn't access it before, right? So, like.
So if it actually makes it easier to access crypto because the regulatory barriers go away, okay, good point.
But like. Yeah, certain institutional investors can't go and buy ETH or Bitcoin on a you know, crypto exchange.
On a Deribit, for example.
So the ETF was the way, because you know, for a lot of people playing natively in crypto, like myself, and you know, you're going to be buying crypto on an exchange and then staking it, and you're doing that. I'm not going to touch the ETF. But I imagine a lot of people buy the ETFs, like they can't touch it on the native exchange. They can't. So all of a sudden, it's just going to encourage, I guess, more adoption at the margin. But I wouldn't say it has a huge impact.
And to your point, Imran, a lot of people were talking about staking being kind of a fixed income style thing, some kind of a yield product, and we were always saying that it looks more like a dividend yield, right? So you got your volatile asset, and then it pays dividend, which is great. And the higher that dividend is, and the more predictable it is, we know that the market likes that, investors like that. But it's not why you really, unless you're at a very different stage in maturity of the market, you're not there for the dividend yield.
Yeah, I agree. All right, boys. I think that we can wrap it up there. Great discussion. Appreciate you coming on the show, mate.
Thank you for having me.
Really good to have you on, Alex. Yeah.
And we will remember, like and subscribe so you can get this notifications for when the next episode comes out. And we'll catch you all back here next week. Cheers.